welcome back, and you're watching Market Fatafat on ET. Now, this is a show where we talk about all the stocks that have been buzzing in trade on the back of news flows and on the back of technicals. And now on the technicals, we're joined by Arpit Beriwal, manager at Motilal Oswal for the derivative side. Arpit, very good afternoon. Thank you so much as always for joining in with us. And the first stock that you've picked out for us is an exciting one. M&M today surely buzzing away in trade, given that there's a lot of commentary that's coming in, and top Nifty 50 gainer today. But what's the outlook for M&M going forward? Should we expect this up move to continue?
Very good afternoon, everyone. So if you see overall, we have been quite bullish on auto index from past almost 3-6 months. If you see overall M&M, the price structure, so auto index has been a secular uptrend and forming higher highs, higher low structure and trading a lifetime high territory. If you talk about M&M, technically, the stock is strong uptrend. On monthly scale, the structure of higher lows, higher highs is intact from past 4 months. On weekly scale also, it gave a range breakout above 2700 levels, and on daily scale, it has given a fresh range breakout above 2850. So it is slowly, steadily, the base is shifting higher from 2200 to 26, from 2600 to 2800 zones. So now the major support for M&M stands near 2800 levels, and slowly, steadily, we can expect up another 6 to 8% rally in the stock towards 3000, 3100 levels. So M&M within the auto pack would be a preferred pick. One can buy at current levels or minor dip towards 2900 levels, with keeping stop loss of 2800 for an upside move towards 3050, then 3100.
All right, that is M&M for you, the top Nifty gainer for today. But moving on, Symphony Pharma is the other counter that is in focus today, and it is coming on the back of the fact that the company has executed a definitive agreement for acquiring 100% of equity stakes in Sapala Organics Limited. Now, Sapala is a Hyderabad-based CDMO focusing on oligo drugs and nuclear acid building blocks, including phosphoramidite and nucleosides, drugs delivery compounds, and this is one of the amongst other drugs that they manufacture. And the company has agreed to initially acquire 67.5% by way of secondary transfer of Target's existing shareholders. This represents 51% of the share capital of the Target on a fully diluted basis. Now, after FY27, the company will acquire the balance shareholding through secondary purchase, such as that of post-consummation. The company will own 100% of the share capital of Target on a fully diluted basis. On the back of this acquisition, Symphony Pharma is in focus today, trading with gains of 5.4%.
Okay, that's Symphony Pharma for you all. Let's pull up Senco Gold, because that's also in focus today. What we saw is yesterday there was a bulk deal, a block deal that happened over there, where we saw that Hong Kong-based SEF partners actually sold around 5.8% stake in the company. March, they were holding around 10.7% stake, so almost half the stake is what they've sold. The value of that is around 432 crore rupees. Now, yes, while we've seen SEF partners actually sell stake, we are seeing India Aircon ICEV that bought around 6.3 lakh shares in the company. And other than that, what we're seeing is we have one more buyer who's come in, is APAH Capital Master Fund, which also bought 5.23 lakh shares. Company Motilal Oswal also among other buyers, and that is what we're keeping an eye out on today. Senco Gold managing to hold on to gains, because yes, while we did see SEF partners which held more than 10% stake in the company sold 5.8% stake, we're seeing a lot of buying interest also come in for Senco Gold, so keeping the stock of us 1% uptick as of now.
All right, that's Senco Gold trading with gains of 1%. But Gaurav, you picked out Havells for us. Tell us what is keeping this stock abuzz?
Well, yes, Havells is in focus, and the reason being is that the company is going with an expansion plan. So the company is planning to expand the existing capacity, and this is in the terms of air conditioner capacity that they have, manufacturing capacity that they have in Gilot and Sri City, and they are going to expand this with 15 lakh units per annum at each location. With this, the total outlay, the total capex for the company is going to be around 50 to 60 crore rupees. And on back of this news, if we look at the stock performance, the stock actually gained in trade when we talk about sometime during the market, but now it has settled down. It is trading at a flat range. Let's not forget that the company is going to fund this accruals, fund this expansion via internal accruals, and they're expecting the date of completion to be around Q4 FY25. There are reports which suggest that over the last 5 years, company has already invested around 2,100 crore rupees in capital expenditure towards electrical goods and Lloyd brand. So on back of this news, we will definitely watch out on Havells, because with this expansion, we may see some further growth coming up in the company in coming days.
Okay, let's move on to the next one. And Adani Ports, Junaid, this one is in focus on the back of a brokerage note, I believe.
Well, as the Kotak Institutional Equities have actually come up with a note on Adani Ports, they've increased their fair value estimation by 5%, and they are valuing the fair value at 1550 rupees versus 1650 as of now. Now they say that despite weak start of this FY 2024, the market, Adani Ports continues to outperform their peers in this FY 2024 till date. Now such outperformance can be continued going forward as well, is what Kotak Institutional believes, along with beating margins to their peers. Now the company is sitting with a capacity of about 5 to 6 times of its existing capacity, and they believe if that any other peer needs to add this capacity, they'll need to do that at a higher acquisition cost, which may be leading them with a higher cost and less of the profits. The company says the key upside risk to this Adani Ports would be value creation from their recent acquisitions and their recent investments and upcoming investments in ports, and especially in their logistics business.
All right, coming to you, Arpit. Grasim is what you have picked out for up 17% gains in the last 6 months. In the last 1 month, we're seeing a bit of a consolidation coming in there. Tell us what is the upside that you see for the stock?
Yeah, so talking about Grasim, if we see overall good traction is seen from past couple of sessions in cement stocks, and all cement stocks have seen a quick rally in last week itself. So within Grasim, if we see technically, the structure is in strong uptrend. On monthly scale, the structure is higher rise, higher low. On weekly scales, as rightly mentioned, from past 6 weeks, it was consolidating in between 2300 to 2500 zones. However, this week has seen a sharp uptick and range breakout above 2400 levels. So all in all, looking from a technical perspective, it is trading over short-term moving averages also, and good buying is seen across cement pack. So we can expect good steady rally towards 2650, 2700 levels in coming session. So Grasim would be a top pick within cement pack. One can go long at current levels or minor dip near 2430, 2440 zones, with keeping stop loss of 2350 for an upside move towards 2600 and 2650 levels.
Surely, keeping an eye out on that. Let's move on to the next stock, and we have L&T Finance that's in focus. Yes, we did know there was a block deal that was happening yesterday. We didn't know the seller, that Bain Capital was the likely seller, and that is what has come in. Bain Capital has sold its stake in L&T Finance. Now, what is the Bain Capital, BC Asia, as well as Asia Growth Investment and BC Investment VI Limited are the sellers, while we're seeing in terms of the buyers, we have interesting names that have come in. Now, in terms of the buyers, what we're seeing, we have seen Morgan Stanley, that is actually one of the buyers who's bought shares in the company. Other than that, we have DSB, BlackRock, which is there, Goldman Sachs, then other than that, Mirai Mutual Fund. So surely a good set of buyers that have come in for L&T Finance. Yes, apart from the sellers, which we already had factored into, because we had heard from reports suggesting yesterday, we had spoken about it as well. So keeping an eye out on L&T Finance, managing to hold on to gains of 3.5% as of now.
All right, moving on to the other counter that is in focus today, and that's RITES. In fact, it is trading with gains of over 3%. Right, that's on the back of the fact that the company has signed an MOU with the Delhi Metro Rail Corporation, and under this MOU, both the companies will collaborate in operations and management projects of Metro Rail, including rolling stock, depot management, station management, maintenance of railway infrastructure in India as well as overseas. Now, the partnership will streamline the process of jointly exploring, securing and executing consultancies to operate and manage metro, LRT and a mass rapid transfer system in India and abroad. And as a part of this collaboration, DMRC and RITES will work together to leverage each other's strengths and enhance business capabilities. In the back of this MOU, RITES is trading with gains of 3.9%, almost 4% in trade.
Okay, keeping an eye out on that. I'll request the producer to pull up the charts for EIH. That's the one that is in focus. And why? Because they've announced a bonus issue in the ratio of 1:1. We had seen an uptick coming in the stock. So let's pull up EIH. 7% uptick is the last time we checked. Yes, 4% uptick is what it's holding on to. So yes, keeping an eye out on that one. EIH surely in focus on the back of news flows. But let's move on and keep it going with the other stocks that we're talking about. We have Titan, Arpit, that you've picked out for us. What is it that you're expecting from Titan in terms of a move that one could expect? Last 6 months, very flat, right, in terms of a move, not much of a shine or glitter coming for Titan. Now what's the word?
Yeah, so talking about heavyweights, we have seen completely lackluster movement in heavyweight. But within the gold space, if we see, Titan is a good reversal bet from lower levels. So technically, it has formed a strong base near 3300, 3400 zones. On weekly scale, it gave a range breakout of above 3450 levels. And on daily scale, it has formed a double bottom pattern, which is a bullish price reversal. And it is managed to surpass its 50 DEMA. So looking from a current junction, the risk reward is quite favorable. And we can expect slow and steadily move towards 3700 levels, 3750 levels. So technically also, if we see the momentum indicator, RSI is also giving bullish crossover. So all in all, within this space, it looks quite favorable from current junction. Slowly, steadily, we can see an uptick of 7 to 8%. So one can go long at Titan at current levels or minor dip in between 3470, 3480 with keeping stop loss of 3400 for an upside move towards 3700 zones.
All right, moving on to Gaurav then. Gaurav, you have picked out RIL Reliance for us. Tell us why is this stock a buzz in trade?
Well, yes, Reliance Industries is definitely going to be in focus, and the reason being that the Orbit Connect India, which is a JV of Jio Platforms and Luxembourg-based SES, has actually bagged a crucial landing rights and market access authorization from space industry regulators, India National Space, as per some of the agencies. What they believe is that this will actually allow the Orbit Connect, which is the company formed by the JV, to operate satellites above India, and this will further there are some further approvals which are needed, but for now sources have also added that this JV has actually applied to DOT seeking trial satellite spectrum for both Ka and Ku brands through the administrative routes for running advanced trials on its nationwide satellite broadband network with key clients. And on the back of this news, if you look at this giant, now this has gone up almost by 8%, and this is moving towards the 52-week high that we have seen for Reliance Industries. But definitely watching out on what will happen next, because this might be a breakthrough for Jio, which is actually a subsidiary of Reliance Industries.
Surely keeping an eye out on that. But on that note, we're going to slip into a very short break. Don't go anywhere. More stocks after the break. Welcome back. You're watching Market Fatafat on ET now. Let's keep it going with the stocks. And Arpit, the next one you picked out for us is Ashok Leyland. On the charts, what is the level that you're keeping an eye out on, and what's the story on the technical front?
Yeah, so talk about Ashok Leyland. If you see, as we are quite bullish on the auto and auto ancillary space itself, so Ashok Leyland also gave classical monthly range breakout above 200 levels in the last month itself. And last week we've seen good recovery. It retested its previous breakout zone around 210 levels, and strong recovery was seen from lower levels. So technically on the weekly scale, it gave a range breakout above 230 zones, and on daily scale also it is holding at higher levels. So going forward, as there is strong momentum seen across the mid-cap space and auto space has been a secular uptrend, we can expect good rally of 5 to 7% from current levels. So positionally also and on an immediate basis also we're expecting quite good momentum. So Ashok Leyland would be a buy at current levels or minor dip towards 238, 240 zones with keeping stop loss of 230 for an upside move towards 255 and 260 zones.
All right. Moving on then, Puravankara is the other counter that is in focus today. In fact, the stock was up 2% after the company's board granted in principle approval to raise funds via QIP of up to 1,000 crore rupees, and according to the stock exchange disclosure, the instruments to be used under the QIP may be equity shares, debentures or preferential shares. Now the board has approved providing a corporate guarantee in favor of Piramal Enterprises for a rupee term loan facility of 90 crore rupees to be obtained by providing Housing Limited, a wholly owned subsidiary, to meet the cost of acquisition of a project, land project that is situated in Dabur in Goa. So on the back of these two news flows, Puravankara is in focus today. In fact, right now trading with gains of 1.9%.
Okay, surely keeping an eye out on that one. Puravankara in focus, almost 2% gains. But Gaurav, the next stock that we're going to talk about is Electrosteel casting. Why have you picked out this one for us?
This is yet another candidate because the board has now approved the proposal for setting up the ductile iron pipe and fitting plants in Odisha for the purpose of, and this is the company is going to acquire almost 500 acres of land parcel, which would result in increase in production of the capacity of DI pipes and fittings in the unit phases. Now, this update came a month ago, and on back of this now the company has actually signed a term sheet with Saffron Resources to acquire around 525 acres of land in the same area. If we look at the company's profile, this is India's one of the largest integrated DI pipe manufacturer. The company has actually manufactured more than 7.4 lakh ton TPA of pipes in FY24 itself. And if we talk about the industry and its growth prospects, given that the company is coming up with a new plant, we may see some further upside when it comes to revenues. And on back of this news, if you look at the stock performance also, that was up more than 3% when the day started, and now it has settled to 1.5%. So definitely watching out on this company and see how it performs in days coming ahead.
Jinay, coming to you now. Kaynes Technology is what you have picked out for us. Tell us what's the news flow here?
Well, yes, so Ministry of Electronics and Information Technology is expected to come up with a 30,000 crore capital subsidy scheme for the manufacturing of electronic components. Now, this will not also benefit Kaynes, but also other EMS stocks and companies such as Dixon Technologies, Syrma, Avalon Technologies and others. Now, the management was earlier on it now where they told that government push for this electronic manufacturing will benefit all the discovery will benefit the discovery phase of all Indian companies across geographies, and Kaynes Technology believes to become a global integrated platform for global market. Also today Kaynes hit an all-time high levels and is trading with the gains of about 2.5%.
Trading at an all-time high level, and like Jenna was also mentioning that we did speak to the management, Jairam Sampath, whole-time director and CFO at Kaynes Technology. Listen into the growth outlook that he highlighted.
Primary push is in terms of substituting imports with the local production, and then it is supplemented by the government's own spending in making India a destination and also a very developed nation. So there are lots of areas like the power, telecom, transportation, and other infrastructure areas where government is upgrading and modernizing. And that gives a lot of electronics production opportunities to companies like us. That's the second thing which pushes the market. And of course, the penetration of electronics itself is going up in our day-to-day life. And Kaynes has been working in almost all the sectors. So we are kind of sector agnostic in terms of growth potential and growth stories. So even if a couple of sectors don't work very well, we have enough of customers and enough of traction in the remaining sectors. So we are pretty confident that for the next 5 to 10 years, 50 to 60% kind of growth in the revenues is quite feasible. I think you should expect growth beyond 50% on a CAGR basis. And the way these growths happen is that you acquire customers one by one, So it may not reflect the quarterly numbers, but it will reflect certainly the annual numbers.
Well, coming to you, Arpit, Cipla is the name that you've picked out for us. Tell us what are you seeing on the charts for this?
So talking about Pharma Index, so Pharma Index has been quite underperformed for the last couple of weeks, but we have seen a massive range breakout in the last week itself, and it has given a consolidation breakout after almost 14 weeks. So from here on, from a positional perspective also, all pharma stocks have seen a good rally, but within that, Cipla would be a preferred pick. So technically, if we say it is trading a lifetime high territory, and monthly scale, the structure is intact. On weekly scale, it gave a range breakout above 1500 levels. And the good part is that it is holding about 1500 zones from quite a number of sessions. On daily scale, the support is shifting higher, trading above its short-term moving averages. So being as Pharma is also outperforming, and Cipla has been the most outperforming stock within Pharma pack. Slowly steadily we can see a move towards 1700, 1750 plus levels. So Cipla would be a preferred pick within Pharma pack. One can buy at current levels or at minor dip near 1520, 1513 zones, with keeping stop loss of 1440 for an upside move towards 1650, then 1700 levels.
Okay, keep an eye out on those levels over there for Cipla. But let's move on to Gaurav, and NALCO is the stock that you've picked out for us. It's buzzing with gains of almost 3% right now. What's the news flow here?
Okay, so for NALCO, there is a news flow that we may see some kind of benefit coming up in the cost structure because the company has now executed mining lease deed with the state government of Odisha today over an area of 698 hectares for a bauxite mine in Koraput district. The mine actually has an annual production capacity of around 3.5 million tons, and it also has reserves which are estimated at around 111 million tons, which projects a mine life of around 32 years. Now, this strategic move will actually ensure the secured supply of raw material material to NALCO's existing refineries and also support the future expansion of the plan of the company. With this, company is also poised to strengthen its position when we talk about aluminium industry and optimize its production efficiency and meet the growing demand of aluminium both domestically as well as internationally. Now, talking about the stock, we have already seen that the stock has increased almost by 3.5% in a day-to-day, and given that this may actually provide some kind of cost benefit to the company, definitely a positive move which the company has taken, and on back of this we will be watching out on this stock in coming days.
Surely keeping an eye out on that, but let's move on and talk about the next stock. That's Indian Hotels is in focus. Arpit, why is that? What's the chart indicating for Indian Hotels?
Just talking about Indian Hotels, if you see from past couple of months, it was trading in a range on monthly scale between 560 to 610 levels. However, on weekly scale, we have seen good recovery from lower levels. And on daily scale, it has given a range breakout almost after 35 sessions, above 595-600 zone. So looking at the overall chart setup also, the risk reward is quite favorable, and slowly, steadily, we can see an uptick towards 650-680 levels as quite a strong base formation seen near 550-560 zones. Also, it is trading above its 50 DEMA, that is perfectly acting as a major support. So we can expect good 6 to 8% rally from current levels, and one can go long at current levels with keeping stop loss of 575 for an upside move towards 650 and then new lifetime high towards 666 levels.
All right. Viewers, if you are feeling hotter than usual, it's because the heat wave this year has been one of the longest and the deadliest many. According to IMD, 14 out of 36 subdivisions in the country have recorded over 15 heat wave days. This year has been one of the hottest in the recent times, and it isn't getting any better anytime soon. And the Met Department has warned that the heat wave situation will continue for the next 4 to 5 days before the weather improves. My colleague Amandeep is joining us with the latest on that.
The people have to wait till next Thursday, just because Met Department has predicted that weather might improve on next Thursday and rain is very much likely and predicted by the meteorological department as well. But till that point, till that date, the temperature has been sworn into 44, 45, and somewhere in some areas of the northern part has reached it to 50 as well, and people are suffering, and people have started installing the temporary installations to providing the water on the roadside as well. And even the administration is issuing the advisory repeatedly not to come out unnecessarily and in fact avoid heat waves, just because some of the people are also suffering from the heat strokes as well and getting fainted due to this extreme weather, just because there is no relief for upcoming 4 to 5 days, and that is the reason people are very much concerned about their works and even their regular engagements for that they are coming out. And even in this extreme heat wave, the people are very much into the problematic situation.
Thanks so much for that update, Amandeep. But let's move on and just an update on the domestic front. A massive fire broke out in a shopping mall in a southern part of Kolkata. Several fire engines rushed to the spot to douse the blaze, and as of now there is no report of any injury. Firefighting operations are underway and traffic movement in front of the mall has been regulated. So yes, we'll keep you all updated on that front. But with that, we are absolutely out of time on this edition of Market Fatafat. So thank you so much, Arpit, Amar, Gaurav, as well as Jinay for joining in with us. And viewers, it's a goodbye from Ankita, myself, as well as the team who put the show together. And a happy weekend to you all.
If you like this video, then like, share and subscribe to ET Now.